Welcome to the Cashflow Academy podcast. I'm your host, Andy Tanner. Great show on deck today. Very exciting. We have Gregory Zuckerman with us, who is a repeat guest. We've asked him to come back and talk a little bit about his book, The Man Who Solved the Market. It's a wonderful story about Jim Simons, who really is the guy who solved the market. But drop by a couple of plugs. Drop by yourinvestingclass.com as always. And there's free goodies there. We don't have a lot of time today, so we're going to hop right in. Gregory, it's good to see you again, and thanks for coming back. This is going to be awesome.
It's a pleasure.
So the passing of this was a lot of people. I don't know if they know who Jim was, and let's start right there. You wrote this book called "The Man Who Solved the Market," one of the most important books I've read, actually, because well, I'll get into why I liked it so much, but just a little bit of your background and why you decided to do this book on Jim's life. And now that he's passed, the value of what it's just, you can't, there's so little about him anyway, but you have the most comprehensive, biography on his life. And when someone passes, I mean, it's like when Munger passed, right? Every word he ever said, you cling to now. This vast encyclopedia of knowledge closes, and it's the same here. So a little bit of background, and we'll talk a little bit about that important book you did.
Sure. And yeah, there was this new interest in Jim, appreciation for Jim on his passing, as is always the case with artists and investors as well.
Yep.
So Jim Simons was a mathematician, one of the greats of the past 100 years or so. He's a geometer, and he was very accomplished in that world, and he left it all, gave it up to the chagrin of his colleagues to try to figure out markets. And his thesis was there are patterns that people don't appreciate below the radar screen, even fleeting patterns lasting minutes, even shorter, and sometimes weeks and days and maybe months. Not usually. They didn't really focus too much on the longer term investing. And he was going to discover them. And it took him a while. And that was sort of my hesitation upon agreeing to do this project. Well, look at these returns, and I'm jumping ahead, but he is the greatest, I don't know, you call him trader, investor, speculator in history, the best returns in history. So he and his colleagues at his firm is called Renaissance Technologies. They had annual returns in their key fund. It's called the Medallion Fund, annual returns of 66% a year before fees. And then charged fees largely to themselves, because over time they kicked out all the outside investors. They just want to make the money themselves. So he goes down in history as one of the greats, if not the greatest investor. And so my book is about his life, and it's about how he figured out the markets along with his colleagues. And frankly, about half the book is not about Jim. It's about a bunch of interesting, to me anyway, characters he surrounded himself, quirky, odd, and they're scientists, they're academics, they're mathematicians. They're not the people you would have expected to have solved the market, and yet they did. So there are a lot of lessons there.
It's huge lessons. So I'll share with you a personal anecdote why it's fun to have a podcast because you get to talk to fascinating people, and you're one of these fascinating people. So my son will be a senior in high school this year. And, when you turn an 18, you're thinking, what do I want to do? And I taught my son to trade options seriously, probably around the ninth grade is when we got serious about it.
It's dangerous.
So well, we write covered calls.
Okay.
He's smart enough to, not go crazy.
Yeah.
But he loves to trade options. He loves to get paid. I mean, right now he's selling some cash covered puts on the dip to try to see if he can pick up a few bargains. And so he's always had a foot in the investing world, and he likes it. And unlike his father, he does really well in school. So I said, son, here's an interesting book you ought to read. And I handed it to him about a week before Jim passed.
Wow.
And so my son starts diving into this thing, and we're just having the most amazing conversations because I said, son, maybe you want to do quantitative analysis. And the story, I went and reread it with him because it'd been a while since I'd gone to it. And I'll tell everyone why you buy this book. What I thought was interesting was the humanness of all these, the flaws of all these people as they tried to grapple. I really thought when I picked this up, I was going to read about a brainiac who had no emotions, who was totally calculated. And next thing you know, this guy's riding a scooter to South America, and he's getting he's getting a gang. This gang surrounds him with guns, and then the police throw him in jail. And luckily, the mayor went to Harvard and says, "We got an MIT guy in jail. I want to talk to him." So, just incredible personality of having this one foot in academia. Of these professors don't care about money. I mean, PhDs don't drive Ferraris. I mean, these guys are so wrapped up in whatever research they're doing. But Jim had this other foot in the market, and I guess they traded a little sugar, and they got a little sugar from the sugar, and it just got in his blood. So that was really interesting as I saw the humanness and the greed and the FOMO, and they were kind of a ramshackle deal starting out. Yeah.
Yeah, so in all my writing, books and at the Wall Street Journal as well, I looked for the people behind something big, some revolution, some advance. And in this case, it's creating the greatest trading firm in history. And the people, first and foremost, Jim, but others as well, surprised me as well in terms of their quirkiness and their oddness and the ambitions, and they're just unusual. Maybe it takes unusual people. It doesn't shock you. Unusual returns. Maybe you have to be an unusual person. So they're revolutionaries. They discovered this new approach to trading, quantitative finance. And there were others doing it as well, but they really are pioneers. So yeah, I was a little wary, frankly, when I started the project, just how interesting our scientists and mathematicians going to be. But they were really fascinating and entertaining, and a lot of lessons, I think, from these people. So I really enjoyed dealing with them on the project.
As a trader, I do more investing than trading. And the way I say, you say, was he a trader? Was he speculator? Was he investor? Or he kind of had dipped in everything. He was in
Yeah.
currencies and stocks and in commodities and all kinds of stuff. So he really was trial and error on a lot of stuff. They'd write an algorithm and they say, well, looks like this works, but they wouldn't know why it would work. And then it'd work until it didn't, which is where a lot of this stuff goes. So I was fascinated because as I look at my years in trying to find my rhythm and what I like to do, man, I fought all the same stuff. And I felt so emboldened to realize, well, I look at Buffett and Munger, and these guys put their pants on one leg at a time, like everybody else does, and they're going to fight with, they were fighting about stuff, and you got to sell this. No, I'm not going to sell this. No, you have to. And they really would go back and forth. And what I thought was neat about Jim is they would start trading, and they'd kind of depart at times from the mathematical algorithmic goal and just kind of get a feel for the market, especially some of his colleagues would. And they said, well, I'm just doing fine this way, but that's how the market is. You do great until you don't. And he always kind of came back to that, look, I'm going to find a system that is mathematical and unemotional, and we're going to keep doing this until we figure it out. And I think that's a great lesson for everyone. And it's very, very confidence. It's a confidence builder for people that like you and me. We have better technology, by the way, than he did when he started out.
That is
Right
true.
now.
That is true. Yeah. So yeah, Jim, I guess the biggest reaction I had from the book from readers is, wow, it took them forever to get it right. And that was a surprising element to it as well. For me, when you hear 66% a year, you figure, all right, they flipped a couple switches, turn on the
Yeah, bang.
program and let it go. But they really worked on it from 1978 to 1993, really. They finally got equities, and they had commodities and fixed income and currencies figured out by around 1990. But it took them years even after that for equities, and that was the key to their success. So yeah, it took them a lot of years, trial and error, back and forth, different approaches. Should I trade more instinctively, my intuition and fundamentals, or should I use a system? And that's what they arrived at. And for them anyway, it worked much better having a systematic approach. And I really have become a believer in that. And having some systematized approach, not just for investing and trading, but in life. So you look at pilots, they get on their plane and they've got a checklist. Surgeons have a checklist, if only to remind them to do certain things. And especially in a crisis, and we're seeing this in the market right now, when things are really volatile, you want to lean into, you want to rely on some system of some kind. It's not to say that everyone has to be a quant. No, but you can't also be winging it either and using your intuition and judgment. And it's sort of discouraging that some of the biggest decisions in society are made by people just sort of figuring it out as they go along. The president, Federal Reserve to some extent, others, members of Congress, they're sort of winging it. Whereas some of the best businesses have a system of some kind that they can rely on.
For sure. We're speaking with Gregory Zuckerman, and he is the author of The Man Who Solved the Market, is the story of Jim Simons. We're going to take one quick little break for commercial, and when we come back, we're going to talk about some of the other books you've written, and we're going to talk more about Jim.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to the Cashflow Academy podcast. I'm here with Gregory Zuckerman, and he is the author of The Man Who Solved the Market, the story of Jim Simons. And fascinating book. We've been speaking a little bit about the system before we went to break. And I can't agree with you more. As I've interviewed so many different people, it is so interesting that people want to find the best asset class. You know, real estate's better than stocks, or business is better than real estate, or crypto's better than business. And they think that it's a function of the asset class sometimes. And then once you decide on an asset class, they think it's about the style. Well, are you a fundamental value guy like Buffett and Munger? Or do you become a quant guy like Jim? You know, what's the best one? And the truth of it is, what I've found is it's really a function of the investor more than anything else. It's your ability to find what you land in and what you're good at, and to really stick with that system. People talk, and what I thought was fascinating is I've always been a Buffett guy. I mean, a little dogmatic, a little bit of emotion there. I just, love that fatherly figure who goes out and makes it simple, supposedly, until you see his financial statement. He's a little coy that way. But this guy did, the argument is that you couldn't beat the market with technicals or with quant or with anything. It was a random walk. You couldn't do it. And he did it. And he did it year in, year out, year in, year out. And it showed it could be done. How do you think, AI, and now they do, I was looking on their website, I don't remember how many terabytes of data they mine per day, but it's a significant amount of data. And you contrast with the story. I love this story in your book, and I don't want to do all these spoilers for everybody, but it's almost like a movie. Good writing is a screenplay, especially with history, because the whole thing, the golf, he's a caddy and he's meeting all these guys. It's like a movie. And I picture these guys hauling this refrigerator-sized computer up to their office on the second floor, and it's got like 300 megabytes of memory and tapes where you used to have to run tape in it. And I thought, man, your Apple Watch can do more than that now.
Yeah.
How do you think he would feel about the future in AI? What do you feel about the future in AI? Is it going to be more of the quantitative analysis and machine learning, or does a guy like Buffett still survive?
So I think the answer that a guy like Jim would say, and I've talked to him, but I've talked to other people at the firm, is that we're not yet at the point where we can turn all decisions over to the computers. And as much as they are a quantitative firm, they believe in relying on the system. And frankly, you would hit at it earlier. Yeah, once in a while they'll step in, but most of the time, 99% of the time, they'll defer to their computers. That said, the algorithms that they develop there are still man plus machine, or more like machine plus man. And they're believers in that as opposed to all machine. So there is still an important role that humans play. They don't believe in, yes, their computer systems, their trading systems act on their own in some ways, but they're acting on algorithms that are built in part by humans, and they're testing ideas, testing theories, theses, and they will make trades based on opportunities that their systems detect that they don't really understand, but then they try to understand them afterwards. So again,
Yeah.
I'm still a believer in the man plus machine working together. You become much more effective.
That's a really important point, because I remember there was one time in the book they have a breakthrough, and I can't remember what they were trading. I think it was a commodity or a currency at the time, and they were trading it, and they said, this is working, but we don't know why it's working. And as soon as I read that, before I even turned the page, I go, this is going to fail. This is
Nah.
going to blow up on their face. This is going to fail, because if you don't know why things work until they don't, and you don't know, in the 90s, you could throw darts at a stock chart on the wall and you couldn't miss. And a lot of that, rising tide, and you catch something great and you think you're smart when you're really kind of lucky. And I agree. I'm not a great chat GDP guy, but I've learned that, first of all, that thing's a train wreck if you don't understand prompt engineering, and it makes tremendous amounts of mistakes. It's certainly an open platform and it has room to grow. But I agree with you. I think the smarter the investors are, the better they can use those tools. The surgeon's education makes the surgeon, not the scalpel. And you can give me the best medical technology and imaging in the world, but I still need to know what I'm doing. So education's a big deal.
Yeah, I've written a story at the Journal about how, in some ways, Wall Street was far ahead on machine learning. Guys like Jim Simons were doing it decades ago. That's part of the reason I wrote this book, to understand these pioneers. And yeah, Jim and his colleagues were doing AI, doing machine learning, which is a subset of AI in the 80s. It's crazy. And yet they've arrived at the determination that you can't turn everything over to the computers. So while there's some things you can do very well by deferring, like the actual execution of the trades, a lot of people on Wall Street do defer to the computers too. But in terms of developing the trades, there's still humans involved.
For sure. Let's talk a little bit about, so this book was very inspiring to me, and I thank you for it, and certainly has inspired my son. He was so fascinated he's like, boy, this guy's a character. I says, yeah, they're not all just eggheads here. These guys were not born without personalities, for sure.
Yes, yeah.
So what makes the book so rich is a narrative, and it is. It's like you've written a screenplay almost, because the movie, in my mind, I mean, you nailed it in that way as a writer, because that's what you want. Let's talk about inspiring young people. You've written another about the Olympics and LeBron and Simone Biles and things. Tell us a little bit about some of your projects, because a lot of our listeners often say, "Hey, how do you inspire your kids? How do you get them going?" I says, "Well, I expose them to something other than their iPhone." So.
Yeah. So I've written two books with my two sons, and one's called Rising Above, and the other is Rising Above, Inspirational Women in Sports. And the idea was, we went out to talk to stars in different sports about how they overcame challenges in their youth. Racism, poverty, physical differences, abuse, physical abuse, sexual abuse, a whole range of challenges. And it's remarkable what they've overcome. And I think there are a lot of lessons. And we wrote these books to inspire young people. And we get letters all the time. Hey, this is the first book my son or my daughter ever read. They didn't want to read, and they've been inspired. And I speak sometimes to schools, and that was sort of our goal. And we did it partly, frankly, I did it because my youngest was born with two fingers on his left hand, and he's a big athlete, and he was self-conscious about his hand for many, many years. And I thought, if we went out and talked to people like Jim Abbott, I don't know if you remember the pitcher Jim Abbott, he threw a no-hitter for the New York Yankees and was a Gold Glove winner, and he only had one arm. He was born also with that difference. So It took a while for my son. Now he is much more comfortable. He's very comfortable, thank God. But it took a little while. That was sort of the goal of the book. But also, I thought other young people also have probably insecurities about all kinds of things. Everyone's dealing with something out there. You may see it, maybe a physical difference that you see, or maybe
Yeah.
inside. So we wrote these books, and we were really happy to have talked to these really inspirational figures. I mean, there's so many. There's a guy, R.A. Dickey, who was a pitcher for the Mets and the Blue Jays and won a Cy Young, and what he went through in terms of sexual abuse and alcoholism and all kind. And he lost his fastball, had to turn to a knuckleball, and all kinds of different challenges. So anyway, we were proud to have written these books, and hopefully it inspires other young people.
Well, hop on Amazon.com and pick some of these up. With Jim's passing, as I said in the first segment, it's so strange. Like Eddie Van Halen passes, and the virtuoso, or Neil Peart, the virtuoso and actors, and when these guys pass, any insight and nuggets, they just the value of those things skyrockets, because when my basketball coach Rick Majerus passed away, he's a Hall of
Oh,
Fame guy.
wow. Wow, he's
And
a Utah. Oh, you played from a Utah?
I was the worst player in the history of my school. Okay. I was terrible, but I know
Uh,
that, but I was his favorite because
wow.
he kept me on the bench so I wouldn't get hurt, and he wanted me to be close to him. So, but when Rick died,
Nice guy.
Keith Van Horn, he's the godfather of his kids. He's really close to guys like Keith and, Doliak and Miller. When he died, I wasn't particularly close to him like a father figure, but I find myself shedding a little tear. I'm like, well, why is this affecting me? Well, number one, I loved him. But number two, this incredible encyclopedia of
Mm,
basketball knowledge was closed. And
mm.
that's kind of how I felt with Jim's passing. And I went right back to that, to your book. We'd been reading about a week before. And I was like, wow, this is just to have him pass during this co-reading of my son and I says, I'm going to see if he'll be willing to come back on, and because more people need to read this. They need to read this book, and you're a fantastic writer. So
Well, I'm glad to.
we
He was a
thank you.
remarkable guy, special guy, charitable guy. So I'm
Yeah.
glad to keep his memory alive. I went to his funeral. I went to the Shiva afterwards. They asked me to speak. I was like, really? And then it was such an honor to kind of share some lessons from his life. So hopefully people enjoy the book.
You've been listening and watching the Cashflow Academy podcast. This is where we try our best to making investing simple. Drop by Amazon.com, add to your library today. Hope you enjoyed our conversation. We'll see you next time.